Hi everybody, Alex Employer from Expert Forex, and in today's video we're going to be looking at how to create a Forex trading approach that will generate over $1 million per year. And as this slide shows, we're talking about over $1 million a year, and that was an average over a 3-year period quite a while ago, but I'm going to take you through the process of how that was made possible. So I have already done a video on a similar basis, but discussing other elements than the ones I'm going to be discussing in this particular video. But I would suggest that you go and watch this video first. You can see this video has been pretty popular, 37,000 views, and it gives you a bit of a background to how you as an ordinary Forex trader can make a plan to reach $1 million in Forex trading. Now, to many people, it just sounds too fantastic to be able to make $1 million out of Forex trading, but the millionaires ratio is actually an incredibly simple one. Basically, you just have to have a reasonably good success rate, and I'm saying reasonable, 60% is enough, and a good return on risk. In other words, you must make a little bit more than what you're risking on every trade. Now, if I use this as an example, let's say you have a 60% success rate. That means you've got a 40% failure rate. But let's say you make $15 on return on every $10 you invest in a trade. That means that you have a positive return on risk. And that also means that if you take 60% times $15, that's $9 per trade. And if you take 40 times 10, that's $4 per trade. That means you're making $5 per trade if you were trading lots of 0.1. But if you were trading 10 lots, for instance, you'd be making $500 a trade. And my previous video shows you how easy it is to move from 0.1 lots to 10 lots when you're trading successfully. And basically, that is the formula to print money. If you have a positive success rate and a positive return on risk, you will literally be printing money. So what do you need to have a positive success rate and a positive return on risk? You need a trading edge. You need to be better than the market. You have to have an edge over the market. And once you have that edge, you can print money and increase your risk that you're taking on every trade, and therefore start growing your account on an exponential basis. Now, to give you a little bit of a history, when I started trading Forex, I created a bit of a friendship with 3 other guys. Barry Thornton is in fact one of the guys, and he has kindly provided some courses for Expert Forex to sell, the long candle course and the Watto course, which is trading with all the odds. The 4 of us really did a lot of work on Forex. We really researched the market, researched trading extensively. And one day we decided we are going to do a corporate retreat. Now, firstly, we weren't a company, but we were going to go out to a resort, take our wives, and treat that as a working holiday. And that's in fact what we did. We went off to the Lost City in South Africa. It's really a fantastic resort. It's in a crater, as you can see there, and it just has 5-star accommodation and facilities all around. So what we did, there's the 4 of us, we actually hired a meeting room, a small meeting room, and we did brainstorming, and we did strategy analysis, and we did a whole lot of other stuff every day when we weren't playing golf or at the swimming pool and that type. And so we spent a reasonable amount doing all of that stuff. So, but now at the end of it all, we came up with 12 pillars for financial success in Forex trading. And what happened after the Lost City convention was that Barry Thornton went off and he created a business that made well over $1 million a year ever since then. So he's still doing it. He doesn't trade on his own. He has people trading for him, but that is as a result of what happened there. The other 3 of us did pretty well. Thank you very much. So now I'm going to show you the results of our brainstorming at that particular time and how we created principles that would give us an edge over the market. Now, if you look at these principles that we're going to be looking at, every single one creates an edge. So if you combine 2 of them, your edge gets better. If you combine 3 of them, your edge gets better. And we, in effect, combined all 12. So we had a huge edge on the market. We were literally printing money. So let's have a look at them. Okay, and there they are. I'm going to go through them very quickly. They'll make a lot of sense to somebody who has a reasonable amount of trading experience. To somebody who's new, you need to focus on these points in your trading. Whenever you're designing a Forex system, you need to use this almost as a checklist to whether it's successful. You don't have to do all of these, but as I say, we did it because it gave us the most magnificent edge you could ever have on the market. So the first thing that we identified as a key success factor for Forex trading is you have to look at a multiple time frame approach, a multi-dimensional approach. So in other words, you don't only trade on one chart. You have a look at a number of charts and take the information from a number of charts rather than focusing on one. Now that might sound like a simple principle, but in those days, a lot of people were just focusing on the euro, focusing on the 15-minute chart or whatever, and that was their day's trading. So let me give you an example. Okay, now here's a typical setup of charts that one would look at if you were trading, let's say, the pound CAD. The pound CAD is shown here. It's got a weekly chart. Here's the weekly. It's got a daily chart. It's got a 4-hour chart. It's got a 1-hour chart. Now, let's say that is our prime trading chart, which is the 4-hour one. We would look at the trends and price action and support and resistance and all those kind of things on the weekly and the daily. We'd try and find a nice setup on the 4-hour to trade, and we might use the 1-hour to refine our entry. In other words, it's stupid to try and enter the 4-hour chart if there's a opposite price action happening on the 1-hour chart. So we would take the 1-hour chart into account, and also we'd set our charts up so we can see the phases of the market and we can see non-horizontal and horizontal support. And when we're talking non-horizontal and horizontal support, we're also talking about that kind of support on the indicators, because the indicators actually show a lot of support and resistance areas. Anyways, the point here is that we looked at things on a multi-time frame basis. Then we identified the need to look at a multi-currency evaluation. So in other words, if we go back to those charts that I just showed you now, let's say you identify a transaction on the pound CAD, and it's a sell transaction or a buy transaction. You've identified that. What we would then do is we would go and have a look at all the charts relating to the pound and all the charts relating to the CAD. And I'll show you what that looks like. So there are all the charts relating to the pound. So we've got all the pound crosses over there. And the purpose of this was firstly to see if there was a better deal on the pound than the one that we've identified. So we would, and you'll see the pound often has exactly the same format. Look at that. That's the same format, same format, same format, same format there. And we would then wonder, now, why is the format slightly different for these currencies? And by working all of that out. But let's say we were looking at a pound CAD deal. Maybe there's a better deal here with a franc, or maybe there's a better deal with the Aussie. So this would just make us look at things a bit more widely than we did before. Also, we would use these charts as confirmations of the trade we're about to do, or it could also provide us with warnings. So there could be warnings saying, hang on, the CAD isn't, or the pound isn't behaving in a certain way, and we need to watch out. So that would be like the pound, and then what we'd do is we'd have the same thing for the CAD. Okay, so that would be the pound, and then we'd do the same thing for the CAD, and we'd also look for consistencies in what the charts look like, and inconsistencies, and look for better trading opportunities, or we would look for warnings or confirmations of the trade that we're about to take. So that's an example of not just jumping into a trade, but we then would use that opportunity to say, is the pound CAD sell the best transaction we can see in the market? So this is a way of filtering our trades and confirming our trades. So another way of providing an edge in the market. So we've covered multi-timeframe. Right then, all good systems that we came across take horizontal and non-horizontal support on the price action as well as indicators into account. So by doing that, you are giving yourself an edge in the market. And you need to become quite good at that. Now, the chart setup you saw previously allows you to draw support and resistance and non-horizontal support and resistance on indicators and on the charts whenever you want to. It also takes momentum into account. Now, it doesn't mean you have to trade momentum all the time, but you have to take the phases of momentum into account. And when we're talking about momentum, we're talking about indicators like the RSI, which is a momentum indicator that provides great divergence signals and trend line signals and overbought and oversold signals and trending signals and all kinds of other indicators. So now we tested hundreds of indicators and we simplified our hundreds right down to one indicator. And when I say hundreds, I'm not joking, hundreds is what we tested. Then the system must allow good financial management. Now, financial management is the easiest thing in the world because it's mechanical. All you have to do is risk either 2% or 3% of your account, depending how successful your trading is on every trade. As simple as that. If you do that, your account will grow exponentially as you succeed and as you go growing. Your system must allow for frequent trading. Now, we've come across systems where the rules are so strict that you only take one trade a week or two trades a month. Now, that's not going to make you rich. I promise you, you need a system that is going to generate lots of trades. Because when you have a successful formula of a high success percentage plus a good return on risk, then you want to trade as much as possible because you're going to be printing $500 on every 10 lot trade that you take. So you want to trade as much as possible. So you need to have a system that provides you with frequent trading. Now, in order to do that, what we did was we traded 16 currencies at the same time. Now, a lot of people, we came out of courses where they said, only focus on the euro, only focus on the 15-minute chart or something. Biggest load of nonsense. We traded 16 currencies at the same time. And that provided us with a lot more trading opportunities than if you were trading very narrowly. Now, your trading system must take current events into account. Now, to a lot of people that will mean, oh, you must watch out for announcements. But it's not that. You need to know what's going on in the world. Who's causing trouble? Is Trump standing up and making ridiculous speeches? Or is New Zealand cutting its interest rate the whole time and weakening its currency? You just need to be aware of what's going on. Is the unemployment in the US decreasing all the time? Which means that the economy must be going well. Which means the US dollar will strengthen compared to its trading. You need to know those big picture things, because that gives the bias in the market. If you know the US dollar is strengthening or weakening, you are up on the rest of the market. You have an edge. So there is a bit of fundamental analysis that you need to do, but it's not to the detail that you think. You just need to be aware of what's going on and use your common sense. You need a system that allows meaningful small stops and large targets. Now, most systems that are out there are lagging systems, which means the trend has already started a long time ago. You're joining it possibly halfway into the trend. So your potential is so small. So we identified that, and that's why support and resistance is important. It gives you fantastic risk-return ratios and small stops and big targets. So don't get caught up by lagging indicator systems where the trend has to be confirmed for 50 pips before you can enter it, and many times that is what the run will be. So you need to enter deals quickly with small stops. And obviously you need a system that is robust and successful. It has a good success rate. Now, if you apply most of these things like using support and resistance, momentum, and all these other things, the success rate will be a product of all of those things. But a success rate is important. It has to be measured. The return on risk factor needs to be measured all the time. Very few traders ever measure that, and those are the two biggest things that you need to control. Also you need a system that looks at price action. Now, when I talk about price action, we're talking support, resistance, those kind of things. We're also talking about candle formations, because they can actually tell you the price action that the market is adopting. So price action is important. Candlestick formations are important. That kind of thing, price action related. Then you also need to always be aware of the overall market and the currency phases. Is the pound trending? Is it going sideways? And that's why you see on some of our charts we have the multiple moving average indicator, which will tell you, hey, this thing's it started trending and all the MAs are all pointing up or down. That means it's trending. All the MAs are now consolidating into a little knot. That means there's uncertainty in the market and the market is consolidating. Now, here's the one that you most probably don't think about much, but you need to be broker friendly. Now, what we did is, once our accounts reached a reasonable level, we actually went and met with our brokers. Physically went and introduced, and that sometimes involved international travel. So we went and met them. We had lunch with them. We had dinners with them. We got to know them and understand how they tick and what they're looking for and what we can give them that they want and what they can give us what we want. So we had that kind of relation with our brokers. Now, I can't tell you what a big obstacle that removes, because you're not looking over your shoulder all the time. If something happens on your trade, you can pick up your telephone and you say, hey, Bob, something's funny here. Please have a look. And I appreciate a lot of traders can't do that, but we did. And I'm just throwing that in. And that was one of the points that we brought up during our convention, our 4-man corporate convention. So there are the points. Now, in a video like this, I can't go into much more detail, but there are the points for what they are worth, whether you find them interesting, whether you find them entertaining, and whether you're going to take them and turn them into $1 million is all up to you. Also, watch that other video that I mentioned earlier. That also gives you ideas on how to build $1 million trading plan. But I thought I'd make this video to let you know how broad a Forex trading strategy should be. Because most traders put 80% of their effort into trying to find the perfect entry. Now, the other thing is I don't have a course on this, because this is personal and it requires a wide range of trading skills. The closest I've come to transferring those kind of skills was last year, when I had a group of 6 to 8 guys visiting, staying at my house, trading for a whole week, and we actually went through a similar brainstorming approach, and we then back traded and tested and did all kinds of things by the end of the week. That process actually turned all of those guys, I'm in touch with them on a regular basis, all of them are trading profitably because they have the right mindset. They don't take chances. They know what they're doing, but they know the more they trade, the more money they're going to make. So I'm sorry there is no course on this, but if you do a bit of searching on my YouTube channel, you'll find a lot on the lifestyle approach, because this is essentially the lifestyle approach that I'm showing you here. So again, I hope you find this interesting. So from me, Alex Deploy, cheerio.